Hey everybody, it's Rick Fingerman with Financial Planning Solutions. It's tax season. April 15th is right around the corner. So I wanted to take a moment, offer some tax tips to help you potentially lower your taxable income and therefore lower your taxes. So what comes to mind? IRAs. IRAs are a great way to lower your taxes if you can do a deductible IRA. And you have all the way up until April 15th of this year, 2021, to do an IRA contribution for last year. Now, the deductible part comes into if you're working at a company that has a retirement plan there and your income is above a certain limit, then you might not be able to deduct it. So you want to kind of look into that. The same applies if you're filing married jointly and your spouse has a plan at work. There's some limitations there if your income is above a certain amount. So you got to look into that. But you can put in 6,000 or you can put 7,000 in if you're over 50. And the great thing is you don't have to be over 50 when you put it in. You're just going to be 50 by the end of this year. So you can put an extra $1,000 in to get you to that $7,000 limit. If you're self-employed and you have a small business, you could do a SEP IRA. That is like an IRA, but the limits are much higher because it's based on your income. It doesn't have that $6,000 or $7,000 limit. So you want to look into that. The great thing about the SEP IRA is you can actually establish and fund that all the way up until tax filing deadline plus extension. So you can go all the way to October to establish a SEP IRA and fund it for 2020. It's a great thing. Other things to kind of think about are contributions. In the past, if you did not itemize into the standard deduction, you really couldn't, show charitable contributions. Now you can put $300 if you're filing individually, or up to $600 in charitable contributions if you're filing married jointly. So that's something else to look at. Some other great stuff all the way into 2021. If you do itemize, there's higher limits on how much you can actually deduct for charitable contributions. So you want to talk to your tax preparer about that if that applies. Also, FSAs, flexible spending accounts. In the past, you had to empty these accounts out by year end or you lost that money. But due to COVID, they've extended that. So if you had money left over last year in your FSA, your flexible spending account, you can use that money this year in 2021 for medical stuff. You can buy Band-Aids, prescription sunglasses. There's another video I do on that called HSAs and FSAs that talks a little bit more about that, but that's something else you can kind of consider. So there are a few things you can still do to lower those taxes. But even if you're missing these deadlines, bear in mind that things you can do this year in 2021, maybe Roth conversions, maybe charitable contributions, maybe gifting, could really make a big difference in your overall financial health. So feel free to reach out to us, give us a call, shoot us an email. Happy to walk through all those things with you. Don't forget to hit the subscribe button, get more of these videos, and we hope to talk to you soon. Thanks.